So welcome back to Treasury Talks. Bitcoin just hit 121,000, which it hasn't done in, I think, over a month, and it's been trading like a stable coin. So ton of excitement this week. Today we have Brian Brookshire, head of Bitcoin strategy for H100 Group out of Sweden, one of the premier Bitcoin treasury companies from Europe. Brian, welcome to the show.
Thanks for having me on. It's happy to be here today.
Awesome. Yeah. So let's kick it off with Brian. You came from your background as a treasury company analyst, someone, just like the True North guys is, the kid analyst, covering strategy. How'd you get to H100? Like, how did that start? And then later, like, let's also mention around like 121,000. Like, did this surprise you? Did this price action this week come to a surprise to Brian?
Sure. So yeah, it's been an interesting transition. A lot of people, they followed me before I joined H100. So I've been independently covering the space for a couple of years. Really was one of the first people even talking about the international Bitcoin treasury company scene. I remember posting stuff about MetaPlanet after its first 5x in May of last year when nobody else was paying attention. Post got no likes. It wasn't until a year later that some of these topics started getting a little bit more traction. The transition to being inside a public company has been interesting because I'm not as free to talk about even my own company as much as I would like to, because there's a certain way you have to bring information to market, and also it changes the way you talk about other companies, because even though you might be commenting about some other company's strategy, that still kind of reflects back on what you might or might do with your own company. So you have to be much more careful about everything you say. And in terms of why H100, that's I've been in conversation with several Bitcoin treasury companies, as a matter of fact, and got to know Sander over time, and I was impressed by his track record of raising capital. I think for a Bitcoin treasury company, it's no secret that the single most important aspect is, do you have a track record of raising capital, and do you have a path to raising capital in the future? And I think his he had a reputation for being a very aggressive capital raiser. And one of the things that I think is particularly unique about H100 is the partnership we have with a company called FinPeers, which is another company that Sanders started, and is essentially a network of family offices that currently acts almost full time as an investor introducer to H100, has been a big part of our success. So it wasn't just a company that said, hey, let's try something different. Let's get some Bitcoin. It was a company that already had, at least with the sister company, had a track record of raising capital and doing private equity deals, and so the integration was a very perfect fit. And in terms of joining up, what do you do day one? What's interesting from day one? And I think that it really is just a lot of the things that you kind of comment from the sidelines. You go from being the guy on the couch yelling at the coach what to do in the football game to the guy actually coaching the football game, so to speak. So it's how do we get more liquidity? How do we raise more funds? What's the best order to roll things out in? And really just thinking through what to do, how to sequence it, how to prioritize it. And those are really the types of things that you're always thinking about, but particularly from day one, just try to get plugged in and roll in get your internal roadmap going, and then that's what you do. In terms of the price action, it is very good to see Bitcoin back over $120,000. Am I surprised? Not really. I think that October, November are pretty good months for Bitcoin typically. So the October prophecy is being fulfilled. It's good to see. And one thing that, particularly with that is one way that's a good thing for Bitcoin treasury companies is that the ability to raise capital is very heavily tied to mNAV. And, past performance doesn't guarantee future performance. But one of the trends you typically tend to see over time is that when Bitcoin is moving up, there's more excitement in the space. mNAVs tend to follow it. When Bitcoin is, chopping sideways, moving down, mNAVs tend to compress. So we just came out of a period like that where Bitcoin is moving, sideways or slightly down for a while. But now that Bitcoin is back on the move, that should be, I think that's going to be good for everybody in the Bitcoin space. And I'm very excited about what's happening here in Q4.
It's a funny dynamic because I have friends that have traded equities for years, right? And I think
I still have everybody. I see some videos.
Oh, I didn't know. Am I frozen? You guys hear me?
Yeah.
Brian, I think you went frozen a little bit for a second, but I think we all got each other back. Sorry.
All right, we're back. Sorry, viewers.
Okay,
out
yeah,
there.
I see everybody back now. There's just.
No, I was saying it's funny because I have a lot of friends that have traded equities for years, right? And they're maybe not Bitcoiners, where they're not used to seeing this kind of volatility that the treasury companies have had. You've mentioned, a year ago, which now feels like a decade for Bitcoiners. You've been kind of following the space. How have you seen the treasury company, as a whole, from a macro perspective, change over time? Now that you're kind of on the other side of things as well, do you see it from a much different lens? What does it look like from the inside a little bit more there? And then I'll have a follow-up question after that.
Yeah. I mean, I think from the inside, you just have a much better perspective of of the process that that's involved in everything. Taking a project from start to finish inside a public company, it takes time to cross all the T's and dot all the I's and follow the procedures. And it's you don't necessarily see how the sausage is made when you're just observing things from the outside. You see the press release come out, and you go, "Wow, that's cool." It's also different than running a private company. You run a private company, you say, "This is what we're going to do." You tell whoever you want to, that's what you're doing, and then you start doing it right away. In a public company, you kind of have to be almost done with the project before you can tell anybody that you're even working on it. So, by the time press releases come out, the project is more or less finished. So it's a little bit different. And there was another part of that question, if you could remind me what it was.
I honestly forgot myself, but I guess the follow-up to that would be like, when do you think Wall Street will truly understand how to have proper valuations? Because I feel like there's two lenses here. The Bitcoiners are like, these companies are completely undervalued, and 10 years from now, we're sitting on gold mines, right? Whereas people from the outside view this as, I've heard rumors, or not rumors, people have said like SPAC 2.0, right? Where it's like the SPAC craze during 2020, where all of them looked really good and then they all came down, right? And so when do you think Wall Street will fully grasp what we're dealing with all these?
Avi is a big Chamath guy. Just
I was until the SPACs
Wall Street
destroyed me.
That's what we're doing. Yeah, it's a good question. When will they grasp what we're doing? Probably after we have already finished doing it.
Yeah.
But I think the way I tend to look at it is that I think there are these almost like mini cycles that we've seen in the Bitcoin treasury space. Like if you look at Metaplanet, say over the past 2 years, they have the longest track record of anyone we can look at. There's almost like these 6-month mini cycles that have existed alongside the Bitcoin cycle. And most of the people, I think, in the space right now, at least from what I've seen on X, the people who probably jumped in, I would say around March or April last year. And so this is really like the first big swing in the markets they've seen. This is like the first, punch in the face they've taken from 200 vol asset. But if you look back over history, these, the swings, they go both directions multiple times. And that's, I think, that's just part of what it is. It's the nature of markets. And, in terms of valuations, I think, Wall Street, they're still trying to wrap their head around this idea that a Bitcoin treasury company should be valued at more than 1 times mNAV. They still don't really get that. They think it should be treated like an ETF, which in my opinion is completely wrong. An operation company has completely different tools available to it than say an ETF does. If you're an ETF, you can't increase your Bitcoin per share. There's no way to do that. In fact, you lose Bitcoin per share. You have a 0.2% value leak per year, or whatever the expense ratio on the ETF is, and it's it does track the value of the underlying asset, but that also kind of hides some of the mechanics of the ETF. That the value of the ETF is kept in line by the share creation redemption mechanism. And for a Bitcoin treasury company, that doesn't exist. So you're going to see volatility, above and beyond the net asset value. But the company itself is in a position to take advantage of that and capture it into permanent capital. So that's just one way that a Bitcoin treasury company could accrete value. But I think the more fundamental value proposition is that if you look at historical Bitcoin CAGRs, the 10-year CAGR is something like 80%. The 5-year CAGR is something like 50%. Okay, what are interest rates? They're like 5%. Or if you're quote unquote paying through the nose, maybe 10%. Okay, well, if I can go out and I can take the spread on a 50% asset and borrow at 10% and capture that 40% spread, how much money would I borrow to do that? As much as I possibly can. At least within the tolerances of my risk model. So that really is the opportunity I think this space is trying to capture, and I think it's important to keep sight of that, because the way sentiment is, at least was in September, but I think we're starting to pivot a little bit now. The attitude was almost as if the Bitcoin growth story had ended in August of 2025 and was never coming back again. And I don't think that anybody believes that. Certainly Bitcoiners didn't believe that. And as long as those conditions persist, where the rate of return on Bitcoin is substantially higher than interest rates, there's going to be opportunity for Bitcoin treasury companies to capture that spread. And capturing that spread is a means of value creation that, in my opinion, justifies trading above net asset value. Now, we still don't really have industry-wide agreement on what exactly that multiple should be, but it should be greater than 1. And depending on the speed the company is accumulating Bitcoin at, should potentially be much higher. So these are issues that when will Wall Street get that? When will they kind of agree that's the way things should be? Frankly, I don't know that they ever will. Or by the time they agree to it, it'll be at the point where that spread has narrowed to the point where other business models are being pursued. So I think people in the space right now, they're just so far ahead of the conventional thinking that I just see people who are involved in the space are going to continue to be ahead of the curve pretty much in every aspect of this. And I don't know that the mainstream catches up. I think the people who understand Bitcoin, the people who understand Bitcoin treasury companies, I think they just continue being ahead of the curve. That's my own personal opinion. That's not a company opinion, but that's how I see it.
Cool. So I know that Sander has spoken to this, and you have a little bit as well. But different regions of the world kind of have different special characteristics that make them unique for Bitcoin treasury companies. So there are others out there, but I'm curious from your perspective, especially now having sat sort of on the outside and in the inside at H100, how the Nordic countries present a really good opportunity for H100. And also, within the context of that area, there are a few other Bitcoin treasury companies that are developing. Not usually, they're all much smaller than you are at this point. So curious how you sort of think about, what you're doing in the context of some of those other organizations and sort of your leadership within the region.
Sure. And if you're out there in the credit markets trying to, borrow to buy Bitcoin, then one of the biggest factors that affects you is interest rates. And so when you look at different jurisdictional advantages, the two things people tend to point to are the tax regime and the interest rate. I would say, the tax regime, as far as Sweden is concerned, as far as the Nordic is concerned, is fairly neutral, I think, versus other regions. They do have a tax advantage accounts similar to IRAs like we have in the United States, that they can trade Bitcoin treasury companies in. So that's a positive. But so do many other countries. So in my opinion, that's at least keeping par with what is available in other countries. I think the biggest advantage for us, though, is interest rates. Sweden structurally has lower interest rates than many other parts of the world. The benchmark rate in Sweden right now is 1.75%. It was just cut from 2% recently, which, if you compare it to the Fed funds rate, which was also cut recently, but is still, over 4%, that's quite a big difference. If you could potentially borrow at, half the interest rate, that's, you could buy a lot more Bitcoin than you could otherwise. So, And we're still working on our plans for how exactly we're going to tap the fixed income markets in Sweden. That's still work in progress. And just the way that we're able to do that is also different. That's you always hear people talk about, okay, if you're going to launch a preferred stock, you need this an X size, and it's really just kind of taken as an article of faith that you need X size of Bitcoin before you can go out and issue a preferred stock, and nobody ever really talks about why. And I think the reasons really are twofold. One, can you find a buyer for it? The number one thing for any kind of product ever, financial otherwise, is can you find a buyer for it? Can you find enough buyers for it? And I think part of the reason why the requirements for capital are seen as so large is because in the United States you do need a big capital stack to attract fund managers. But if you go out into other countries where just the general pools of capital that people are working with are much smaller, the size of capital that you need for market access is different. So in Sweden, so I think we have an advantage there. But then the flip side of that is, what is the cost of issuance? Because let's say you've got tons of willing buyers, but it's going to cost you X amount of dollars to issue that product. Well, that's going to cut into the margin you're working with in terms of how accretive you're able to execute that operation. So we think there are potential opportunities in private credit markets as well as public credit markets. Private credit markets is potentially past a market where it would not come with a big upfront listing cost, something that could potentially be done later on. You say this is an area of exploration, and that is those are our current thoughts around what the opportunity looks like and some of the advantages of being in Sweden.
I guess to follow up on that a little bit, H100, I think maybe a little bit followed the example of Capital B with Bitcoin-denominated convertible bonds early on. And I think that was very successful for you. I know you also announced a partnership with Stokr a few months ago about tokenized Bitcoin-denominated convertible bonds. So we wanted to kind of dig into that a little bit more. If you could kind of explain sort of the structure of that and some of the pieces that you're exploring with those tokenized convertible bonds and how those could be beneficial for H100 within the ecosystem, because there's only a couple of other companies that have ever used any Bitcoin convertible bonds so far, and I don't think any other companies have done anything around tokenizing them. So that's kind of unique.
Sure. Yeah. Well, let me start by addressing the fundraising we've done to date. A lot of people say, well, Bitcoin treasury companies that only ever do equity sales, they're not going to make it, and that's most of them. And I think a lot of people mistakenly put us in that bucket. Actually, around 2/3 of our funds to date have been raised through convertible bonds. We right from the very beginning, we've been doing convertible bonds, and the ones we did initially were actually fiat based, but the structure we had was different. We had a much earlier conversion rate on them, and so let's say off the top of my head, around 60%, 60-70% of those bonds have already converted. So, and we have around 342 million SEK, which is say around $36 million convertible bonds that are currently outstanding. So, we have partaken of leverage, which, it's my opinion, is the mandate of a Bitcoin treasury company. That's where the value comes from. It's if you're a Bitcoin treasury company with low leverage and you're only doing equity sales, there's probably some opportunity that's being missed. In terms of the Bitcoin-denominated convertible bonds, that is what we're currently exploring doing with Stokr. And the way we're going to do it is, or the way we're exploring doing it, you have to be careful with your wording, is a little bit different. For one, it'll be the first tokenized offering ever. It'll be the first tokenized convertible bond. And also the terms that we are discussing having on it are also going to be a first as far as we know of. And unfortunately, I can't say exactly what the terms are until the offering is the potential offering is released. But it's something we're very excited about. And the Bitcoin denominated convertible bond, I think, is a brilliant structure. As many people know, is invented by Alexander Lizette over at Capital B. A great guy. And basically the way these things work is that they're denominated in Bitcoin. So they're aimed at investors who are primarily Bitcoin investors. A conventional convertible bond is typically sold to a market neutral fund, and they're not actually taking a position in the stock. They don't care about Bitcoin. They don't care about the Bitcoin treasury company. They just care about gamma trading the volatility and collecting their 6% per year. That's what they're in it for. But with a Bitcoin-denominated convertible bond, these are people who are fundamentally interested in the Bitcoin space. They are, taking a bet on the company outperforming Bitcoin, with Bitcoin, downside is their kind of base case. And so this, this affects the issuer and the buyer in two different ways. And primarily, when you get to, say, maturity, the biggest risk of a conventional convertible bond is that, most likely due to a Bitcoin bear market, the stock did not outperform the conversion price. And so you're in a situation where the stock is below the conversion price, but the company is still obligated to make good on the bonds at that price. And so that creates a situation where the company either has to do a very difficult refinance, which winds up being more dilutive than anticipated, or sell Bitcoin, or some other means. The options typically are not really great in that situation. But with a Bitcoin-denominated convertible bond, the bond itself has been sold in terms of Bitcoin. So say you're in a Bitcoin bear market, conversion price hasn't been hit. The worst case scenario is that you just return the Bitcoin to the investor. And there's no situation where you have to do this awkward refinance or take any kind of loss on it. You have this Bitcoin that you wouldn't have had otherwise, and you send it back. Obviously not ideal, but considerably better than the alternatives. And on the upside, then investors, if the Bitcoin treasury company does well, they execute, they outperform Bitcoin, everybody's happy. The bond converts, the company keeps the Bitcoin, the investors get shares in the company, and everybody's happy. So that's what we're looking forward to doing, and very excited about.
So Brian, if you had not joined H100 and you were still in analyst mode, what would be, you imagine, your opinion on the shift away from converts for strategy, which has been always interesting, of like moving from strategy, moving from these converts, but then they're like, hey, it's just like a basis trade, for these desks. They're not your friends. Let's move towards these preferred offerings, which last night got listed on Robinhood, which is a huge boon, I think, for the next generation of investors. Stretch was on there, I think Strife and Stride, which is awesome to tap into that excitement. I think the type of investor that would be interested in doing some of these preferred offerings. But what would has been kind of your shift of like watching maybe strategy just from like just the personal standpoint of like, okay, hey, this I didn't expect this either, Sailor, that like the converts would have their limitations, and then him having to like really create a lot of new products this year.
Sure. Well, as individual before joining H100, these are issues I wrestled with, and I had some conversations with some of the issuers of convertible bonds. I want to say earlier this year, saying obviously they can't say when they anticipate buying more or doing things either, but I came away with the impression that it was going to be difficult to scale, because the amount of convertible bonds, specifically tied to the Bitcoin sector that were out, were starting to just overwhelm the convertible bond market. And in order for convertible bonds within the Bitcoin space to scale, the convertible bond market itself was going to have to scale significantly in order for that to be possible. So I think one, the limits might have been being approached there, and two, in terms of the preferred stocks, I think there are a lot of misconceptions. I think a lot of people, when they saw the switch, they weren't so keen on the perpetual liabilities. There's a lot of people who still think the preferred or the convertible bonds are great, and they don't like the preferred stocks just because they have perpetual liabilities. And I'm not sure that's really the right way to look at it. Now, in my mind, all these strategies at the end of the day are paid for by share issuance in some form, whether it's a convertible bond that converts directly to shares, or it's a preferred stock that has a dividend that shares are sold to pay for. And so at the end of the day, I think the denominator really is how many shares did you have to sell or issue in order to get the Bitcoin from that instrument. And if you run the math on it, and if Saylor's right about 30% Bitcoin CAGR over the next 20 years with these preferred stocks, and you factor in, say, 10% dividends over the next 20 years, and we assume that he's not able to get that down, which I think it's quite likely he will. But let's say we assume he doesn't, and it's 10% for the next 20 years. You actually only wind up issuing about half as many shares doing 10% preferred stock over the same period as if you'd done a convertible bond at 0% with a 50% or at 0% coupon with a 50% premium. So they're actually wildly more creative if you actually do the math on it. And I think that one thing every Bitcoiner has seen is this meme that shows the price of a house in Bitcoin terms going down over time. First, like all the Bitcoin in the world couldn't buy you a house, and now just a handful of Bitcoin can buy you a house. Well, apply that to dividend liabilities over the next 20 years. Those liabilities are also going to zero over time as long as Bitcoin CAGR keeps going up, or rather Bitcoin CAGR sustains and Bitcoin keeps going up.
Yeah.
Which if you believe that Bitcoin is going to be an integral part of the future global financial system, which really the Bitcoin Treasury Company is a bet on, then it's something that mathematically makes sense.
For those watching, and you've kind of touched on this a few times throughout this interview, but if you're meeting someone at a networking event that's not a Bitcoiner, and someone says, "Why don't I just buy Bitcoin?" Because we get this question all the time, and so it's a question I like to ask almost everyone that we bring on is, how do you say in a few sentences, basically, if able to, why you would buy a Bitcoin treasury company versus just buying Bitcoin outright itself?
Sure. I think that's it's the first question that everyone always asks. Why would I buy Bitcoin treasury company instead of just buying Bitcoin? And I think the answer is really straightforward. That the mandate of a Bitcoin treasury company is to increase Bitcoin per share. And so if we're doing our jobs right, the exposure that each share of the company represents in terms of Bitcoin is increasing over time. And of course, it's not an ETF, so price isn't always going to exactly track NAV, and we believe it should be at a multiple. So, but at the end of the day, the metric that we can most directly control is the Bitcoin per share by doing accretive financial operations, and so that really is the entire value proposition of the Bitcoin Treasury Company is that management is going to increase that. And so without you having to take on leverage yourself, without you being able to issue convertible bonds as an individual, which you can't do, or issue preferred stocks where you never have to pay back the principal as an individual, which you can't do, you are able to take advantage of these corporate activities to increase Bitcoin that you can't do on your own, or perhaps don't want to do on your own. Not everybody wants to be a portfolio manager. So,
and a quick follow up on that, Brian. I know you got a question over there, but what happens if a Fortune 100, Fortune 500 company buys Bitcoin, and they, Tesla's kind of in that quiet zone because they haven't been buying anything new, but let's say Apple goes ahead and buys a bunch of Bitcoin. What does that do, or what are your thoughts on what that does to treasury companies as a whole?
So if a company like Apple buys Bitcoin, I think their operations are so large that a company like Apple, if they bought Bitcoin, it'd be great for the space. It'd be great for Bitcoin. Like this would be unequivocally a good thing in my opinion. But the question, what would the effect of Bitcoin treasury companies be? I think it would be overwhelmingly positive because of the effect on Bitcoin, but I don't think they would ever be seen as a direct competitor to a Bitcoin treasury company, because their operations would be so large in relation to the size of their Bitcoin holdings that would still account for a significant part of their market cap and the way that the companies trade.
Yeah. I'm regretting asking Apple because that's probably not the best example, to be fair. But like maybe more of a mid tier, let's say Open Door, which has been kind of a stock. We interviewed Eric Jackson the other day, and Open Door is kind of like a high growth company. So like something like that, if a company like that were to buy it, just with how much liquidity is in the market, do you fear that liquidity would go towards more of the operational Bitcoin treasury companies? Or do you feel like you guys from an opportunity cost of capital still, provide more value overall?
I think we're getting a little bit of a chop here in the video.
You're frozen. Maybe
So
hit
if
the, there you go. You're back.
We're back? Okay. Yeah.
Did you hear the question?
I think you're asking me, what if a more kind of, let's say,
I'll repeat the question. So let's
a
say
growth company were to buy Bitcoin?
Yeah, because Apple's a bad example. So like in Open Door, one of these more high growth companies that are buying it, where it's could have a bigger chunk of their market cap could be under Bitcoin. What would that do in terms of just the pure liquidity in the market, right? Like if I have $100 or $1,000 and I want to put it towards Bitcoin treasury companies, do you feel like some of that capital would flow out of some of the smaller Bitcoin treasury companies and into companies that have more of an operational business in addition? And the answer could be totally no. I just curious your thoughts on that.
Yeah, I really don't think that it would. I think there's going to be two different kinds of companies. I think there are going to be companies that put Bitcoin on their balance sheet, and there are going to be companies that they're all in on Bitcoin, where the operating company remains a small, increasingly smaller portion of their business. And not every company is going to want to go out and do convertible bonds and lever up and buy Bitcoin and turn the company into a Bitcoin proxy. They could dump all the free cash flow they get into Bitcoin, but I still don't think they'll be seen as like true competitors to the space. And also, if they're really focused on being whatever kind of company they are, they're always going to face the competition for capital within the company, because if you're trying to grow, whatever kind of business you're trying to grow, you're going to have to keep reinvesting capital into growing that business, into sales, into product, into development, and you're always going to have that kind of fighting the people who want to put money into Bitcoin. So I don't think you ever really have a scenario where they turn into a competitor. I think to really trade as a Bitcoin proxy, like a Bitcoin treasury company, you have to be all in on it. It can't just be like something you do alongside your operations. I do think all companies can benefit from Bitcoin on the balance sheet. I think that it strengthens any company, but I don't see them, draining liquidity from Bitcoin treasury companies or being seen as competitors to Bitcoin treasury companies. Mostly, I see them contributing to buy pressure on Bitcoin, which is great for Bitcoin treasury companies.
Great. Thank you for that. I know that your executive chairman now, I think he was CEO at the time, but Sander had done a roadshow and kind of visited the US a couple of weeks ago. I think meeting with investors, attending some conferences. I know you and I and he and Avi were at the Bitcoin Treasuries Unconference in New York City. And I'm curious sort of, through that process, what you were hearing as you were talking to investors and institutions and other interested parties about H100, the appetite for Bitcoin treasury stocks for your, company specifically, and what kinds of questions that they had overall about either your operations or comparisons and investments to other opportunities out there. So love to hear kind of what you are able to share along those lines, Brian.
Sure. The limited what I could say about our specific conversations, but I think in general, in terms of investor appetite, it was a really great trip. I think the sentiment among, let's call them institutional investors, or people who are at the Bitcoin Treasury Zone conference, I think the people who are kind of deeply invested in the Bitcoin space and the Bitcoin Treasury space, I think are still very much supportive of the industry. I think the sentiment you see on X versus what you see kind of behind these closed doors or at these conferences, I think is very different. I think the core believers in the Bitcoin Treasury space and the Bitcoin space, they're still very much all in on the space, and it's very different than what you see on X. There's still interest in doing deals, everywhere we went. There's, of course, if you speak to large institutional investors, they call them DAT deals, digital asset treasuries. not a term you see on Twitter as often. We're just Bitcoin treasury companies in this space because we only focus on Bitcoin. But yeah, I think there's still a lot of interest in the space, and it's difficult for me to comment much more beyond the fact that I think interest is still very high in the space, and the sentiment that I see behind closed doors and at industry conferences, I think is still very high. The Bitcoin Treasury Conference being as well attended as it was a good sign to me that I think the space is still strong, but it goes through highs and lows. I think the sentiment on X is understandable, but I think not necessarily reflective of what the long-term potential in the space is.
So I gotta ask a question, Brian. Nice to meet you, by the way.
Nice to meet you.
Question. So I work obviously with Jody and Avi on the podcast, and Brian. One of the things that I always think is you see all these copycat, I call them copycat treasury companies coming out. Like, I mean, you have Bitcoin, now you have Ethereum. Everyone's doing a treasury company, it seems. So for the average person, and I'd say like the people that don't really follow this space as well, that are maybe just getting into it, how would you, what would you tell somebody to how to like do analysis of a treasury company, things like that?
Sure. There's really two things that I would focus on. If I'm looking at a Bitcoin treasury company, who's management? Are they people who have been in Bitcoin for a long time, or are they people who have not been in Bitcoin for a long time? And I'll not put any value judgments on that, but that's one thing I would look at. Because in my opinion, it takes 4 years to mint a Bitcoiner. This is what I've always said. It takes 4 years to mint a Bitcoiner. Maybe sometimes it takes you 2 cycles to become a Bitcoiner. I personally would not trust management that hasn't lived through at least one bear market, because it's an experience that you can't fake, and you're not. Sure. And you think you're prepared for it until it hits, but until you've actually been through that volatility, like you don't have your street cred yet. You have to have been through that at least one time. And the other thing I would say is, really, it's all about capital raising. Does the team have a track record of capital raising? Do they have a path to future capital raising? That is really what determines the success or failure of Bitcoin treasury company. Because in order to grow Bitcoin per share and the Bitcoin stack as a whole, you have to be raising funds all the time, and not necessarily like every single day. I mean, sometimes operations take longer than that to execute, but there needs to be a plausible reason to think that team is going to have success capital raising, over the long run. So those are the two main things I would look at. Are the team Bitcoiners? Do they, have they been around? Have they credibly experienced volatility in the space? And do they have a path to capital raising?
To be clear, I was just going to say really quick, to be clear, like, here's something you just made me think of. How many bear markets have we gone through with Bitcoin treasury companies? And what happens in bear markets? Not good things.
Yeah, we really only have one data point, which is strategy survived the bear market. And I think the closest thing you can have done to have been a inside of the closest qualification to have in terms of Bitcoin treasury companies, unless you were working at strategy during 2022 and 2023, the closest thing you can do to have been to the volatility in Bitcoin treasury companies is to have held the stock. Personally, I did. I've been a holder since about 2021, held all through the bear market, doubled down. But obviously was not employed by strategy during those years, so it's a little bit different. But I think in Bitcoiners, it's not like anyone's unless you work for Bitcoin Core, it's not like you're employed by Bitcoin Core, but employed by Bitcoin. I mean, but I think being a Bitcoiner, having held Bitcoin or strategy through a bear market, understanding what the volatility is like, understanding the types of things that can come at you. I still remember all the sailors going to get liquidated narratives and
that was like
and all that. And he didn't.
Day.
What's that?
I said that was like every day. Everybody was just commenting, oh, sailors this, sailors that. And now all of a sudden, Bitcoin's up, everyone's quiet. But the minute Bitcoin drops, people are going to be right. I mean, you're going to have your normal suspects right back at the table.
Yeah, I mean the people who don't like Bitcoin treasury companies or Bitcoin, they're quieter during the good times and they talk more during the down times. Is what it is. I think from my perspective, just keep executing.
Yeah.
Keep doing. Just keep head down. Keep doing what you can to keep the business going. Do what you can to raise capital and deploy to Bitcoin. You just have to keep moving.
So, just piggybacking off of something you said earlier, and then sort of Sean's question there, Brian. You said that I guess leverage, is important for a Bitcoin treasury company, and leverage is probably what gets a Bitcoin treasury company into trouble in a bear market if you get ahead of your skis. So I think it's different, and I'm not saying anybody does this well, but it's different if you're sort of long only and trying to hodl, whether it's MSTR or Bitcoin. But with the amplification through treasury companies, I'm curious, just sort of yourself, how you think about this, and not necessarily in the context of H100 for companies where you want to be positioned long as Bitcoin's going up, but you don't want to get, too leveraged on that. So how do you kind of think about that, or kind of build mental models around that for yourself or for companies, if you were going to talk about that?
Yeah, sure. I mean, I would hold steadfast that leverage, that exploiting the spread between Bitcoin CAGR and interest rates, fundamentally is where value creation comes from the Bitcoin treasury space, but not all leverage is created equal. If you were going to go do, say, a convertible bond with a 100% conversion premium that was due a year from now, that would be a great way to get in trouble. You shouldn't do deals like that. And there's a reason why we've seen strategy ladder their debt typically 4 or 5 years out into the future. Because is widely cited in the Bitcoin space, if you've held Bitcoin for any 4-year time frame, you haven't lost money. And when if Bitcoin is a long duration asset, one of the longest duration assets, then you need to have your debt and your assets match in terms of maturities. So and that's another reason why strategy is moving towards the professional preferreds, is that it doesn't have a maturity. You never have to pay back the principal. You only have to pay back the coupon. It's basically like an interest only loan where you never have to pay back the principal. So the debt, obviously when if there's a bear market, if there's a downturn, yes, the volatility cuts both ways, and it cuts more if you have leverage. But on the same token, if you've structured your leverage intelligently, if you've laddered things out such that you don't have say 50% of your leverage, 100% of your leverage coming due in a single year, then you are in a better shape than if you have poorly structured your leverage. So it's risk management is key, and not all leverage is created equal. Not all terms are created equal. You just have to be smart about how you do it. That's why Saylor calls it intelligent leverage, and perhaps not just leverage.
Yeah. Quick question from the audience. Big Ryan just commented on X. Innovative idea question. Has H100 ever considered buying a cash cow? Think about something boring, industrial services, waste, materials, infrastructure, who's large enough to generate fiat profit in the 8-figure range, and use that for BTC purchases, or more simply, buying earned income, arbitraging fiat gains for Bitcoin.
I would say that's something. M&A is not something we'd necessarily be opposed to. I mean, our new CEO, Johannes Week, is actually an M&A lawyer by background, but I would say acquiring a large cash cow business is probably not something we would look to explore, just because sort of like we discussed earlier, the larger your operating business is, in relation to your Bitcoin operations, it creates a drag on your stock actually trading like a Bitcoin proxy. I think if you're a Bitcoin treasury company, you actually want your operating business to be small in relation to your Bitcoin operations. It's nice if you have enough operating cash flow to just cover expenses, keep the lights on, protect you, so you have enough time for your plans to work out, because plans are executed over time, they're not executed over days. So I think operating cash flow is good for that, but in terms of acquiring a large cash cow, I would say that is not something that we would look to do, and might actually be somewhat antithetical to the operations.
We talked to Matt Cole last week, and he's always fond of saying Bitcoin is the hurdle rate, and I still think that that's going to matter for that business, right? Because you're either going to use leverage or money to potentially acquire that you could use to leverage or acquire Bitcoin in the same way, I guess. So yeah, it makes a lot of sense, I guess, what you're saying there, and keeping the treasury side much bigger. One of the things that happened over the summer was kind of the OTC listing in the US for H100. I think, I don't know what the right term was, but we weren't able to trade it at the time. So I was thinking suspended, but I don't want to use that term to imply something negative. And I know at times, just given the size of the company and being listed in Sweden, that liquidity can sometimes be a little bit smaller than some of the other companies that are trading. And I'm curious, sort of, anything that you have thought about with that, what the company is kind of working on, if anything, about an uplisting within the US, and how thoughts kind of go around that. And I understand completely, Brian, that I'm putting you on the spot with this one. So if there are things you can't say, we totally get that. But I figured I'd ask, since I know that that's something that I think everyone was discussing on X this summer.
Sure. Yeah, I've got tons and tons of questions about liquidity. And I think it's it's well known that uplistings are a path to increase liquidity for Bitcoin treasury companies, especially in for the international companies. It's something that I myself posted about a lot before joining H100. And in terms of H100's path, we saw the first step with that. As you mentioned with OTC, what actually happened was that there are many different tiers within OTC. So it's not that it was deactivated or turned off. It's that a lot of times when these companies get listed on OTC, the listing is actually not something that the company did. The OTC markets just decided to start trading the stock, and then when they do that, they kind of they might move it around to different markets. And then in August, we did a formal listing with the OTC ID tier on OTC markets, and that is what re-enabled trading for it on many platforms where it had previously not been available. So that was really step one of our attempts to increase liquidity through uplistings. In terms of what we might do in the future, the most I could say is that we're exploring options. But just to give an idea of the general universe of options that are available to us, we are currently listed on the Nordic growth market. The main market in Sweden is operated by Nasdaq, and there are a couple of different tiers. There's there's the first North growth market, and then there's the main market. Those are the two different markets on Nasdaq. Nasdaq Stockholm, that is. We have to clarify that. A lot of people don't know that it's Nasdaq over there also. And that, those exchanges generally have quite a bit more liquidity than the Nordic growth market does. There's also quite a big difference in market access. That's, brokerages like Interactive Brokers, for instance, they trade stocks on Nasdaq Stockholm, but they don't trade stocks on Nordic growth market. I know there's also numerous European brokers that also have direct access to Nasdaq Stockholm, but for whatever reason, not Nordic growth market. So there, so that is one of the potential things in our the universe of options that are out there. And if we were at some point to explore U.S. listing, there's a much more smoother path from being on Nasdaq Stockholm to being on Nasdaq United States, if that were something we were ever to pursue. But for now, the most I could say is that we're exploring the options, but couldn't officially say anything about plans until we actually make an announcement regarding what we might or might not be doing.
Just to wrap it up here, coming from I don't know if KOL or influencer, kid analyst, whatever we call ourselves here on X. Just kind of curious, like, as someone with a strong presence in the Bitcoin community, how do you feel like your role has evolved, and like also getting feedback? Because one thing that I was just actually with a friend for lunch, and I was talking about how cool it is that these treasury companies do this, right? You go out and talk to the communities, and as we said, we had Matt Cole on, and it is going to be this kind of democratization almost, if you will, of these kind of earnings calls, right? So what do you feel like your role is coming from our side of the fence now that you're on the corporate side?
Well, now that I'm on my side of the fence, I think it's actually kind of cool because I can be the head of Bitcoin treasury strategy that I wish to see in the world. I think it's kind of fortunate that I spent such a long time analyzing and looking at companies beforehand, because that really gave me a very clear perspective on the way that I like to see companies operate, the way I like to see them communicate with the market. So now that I'm in the hot seat, I can do those things, to the best of my ability. So, my role now, I think, really is just to make sure that, H100 has, a very clear roadmap, both internally, and that when we do announce things to the public, that it's communicated as clearly as we can. The internal roadmap and what we're able to communicate externally is always different, just because the way you have to take information, public. And I think that, one of the things that I observed as independent analyst is that it's often like very not clear how the instruments work. An announcement comes out, a prospectus is filed, and then Twitter spends a day trying to figure out how the thing actually works and what it means. And so, one of the things that, I hope to do from, our side is that when we put these things out, to also bring educational content with them that makes it a little bit more, consumer friendly, a little bit more digestible for the retail investor. And, just to help people understand what we're doing, because I think that's a really big part of it. People want to know what's going on at all times, which, I totally get, because that was me. And so now that's what I hope to be able to deliver now that I'm, in the hot seat.
Yeah, I mean, shameless plug for our own website, but that's what we aim to do. 21 Rates is digest a lot of this. I think a lot of the preferred stock is something that no one that I know is investing in. Like when Jeff Walton talks about PG&E preferred stock, that's not something that's people are buying on Robinhood. And so then they have to think about it like, oh, this is a different type of instrument. How do I value it versus Bitcoin? How do I value it versus, I have in an equity portfolio? So having people understand, all these new products, I think there's a ton of complexity that needs to be unpacked, but then also not scare people, when they're just getting into Bitcoin, or they want to explore, these different Bitcoin treasury companies. So one fun one want to show real quick. So this was just a Trump quote that came out. I guess he said this maybe at a press conference, but he says he's considering $1,000 to $2,000 taxpayer rebates using tariff money that's been collected. Essentially, consumers paying higher prices on, due to tariffs, and so using that, revenues from that to go back into like rebates for the people. This goes into a broader question to you, Brian, just like putting your macro hat on. We asked Matt Cole, at Cole Macro last week to wrap up the show with his macro insights. What do you think about liquidity? It seems like every rate cut's priced in, but you are in the Trump administration, the Trump era, and you never want to bet against his wallet or his, desire for price to go up. What are your thoughts?
Well, Bitcoin is fundamentally long liquidity. It's a bet that not that government won't stop printing, but that it can't stop printing. So, I'm always long liquidity. Me personally. Mm-hmm. So, I think this is why Bitcoin exists, because the governments, despite their best efforts or their intentions, they just can't stop printing money. And as long as they do that, then hard assets are going to go up over time. Bitcoin is the hardest asset that we know of, and that's I think it'll do well.
Love it. Was down. Sorry about that. Well, I don't have any other questions. Brian, thanks so much for coming on, and really appreciate it. And we'll be back next week. Every Thursday, we're going to try to do around this time. So if you guys have treasury companies that you'd like for us to interview, shoot us a DM. Always open to suggestions, but we'll be back next week. Jody?
And if you have follow-up questions for Brian, send them in to us. We're happy to see what we can do to distill it, and then we can even push out a blog post on 21 rates.
Sure. Yeah, always happy to answer more questions, either here or on Twitter or wherever, or back on the show again. Love talking about Bitcoin treasury companies all day, every day.
And we appreciate that, both on the H100 and everything you've done for the community. I certainly learned a lot from you early on, back in the spring, before you joined H100. Not to say that I've stopped learning from you, but I remember from that. So really good to chat with you today, Brian.
Yeah. Thanks for having me on. Always great talking to you as well, Brian.
See you guys.